On SOEs, we are now joined by Peter Attard Montalto, Head of Capital Markets Research at Intellidex. He now joins us by Skype. Peter, hello.
Good evening.
Are South African SOEs bailout addicted?
Well, there hasn't been a huge amount of fiscal transfer actually over the years. Normally this has been done by guarantees and basically allowing the SOEs to then borrow from banks or from the markets at cheaper rates. And this is actually, a very large quantum and a relatively rare thing, certainly for Eskom. What we've seen more in recent years is the cash injection starting to build up for SAA, for SABC as well. But in the broad context of South African history, this is, a relatively recent phenomenon.
Do you think that our funding models are archaic and outdated?
Well, that depends who you're referring to. I mean, ultimately, the key for an SOE is a proper mix of equity and debt. There's certainly been enough debt on many of the SOEs' balance sheets, but the real question is equity. And this is where the dreaded P-word discussion comes in. Ultimately, what the privatization discussion is really about is, do you have a shareholder in place that's putting in place adequate conditionality, that understands the business, knows how a firm runs, the risks of how a firm operates. Now, you can certainly do that in the public sector, and that's the point that Praveen Gordhan is now making, and the National Treasury is as well, with the conditionality they're putting in place in Eskom. But the simple fact is the private sector, I think, was aware much earlier than the state of what was going on at Eskom, the risks that were developing there, and the huge financial stress which has now suddenly landed back on the sovereign balance sheet.
Now, I read your paper that you wrote in response to Minister Mbowene's budget speech, and you say that we are not a candidate for a sovereign downgrade as yet, but we are accelerating along the lines of becoming one. Why do you say that in that paper?
Well, it's remarkable. South Africans seem to have got unbelievably bearish about the prospects of an IMF program or a Moody's downgrade. And what we should remember here is that this bailout of Eskom is still relatively small in terms of the overall size of the fiscus and of the overall stock of government debt. And that's why there's only a small move up in the existing debt profile versus the medium-term budget in November. Now, this is certainly a move in the wrong direction. There are big doubts on if debt to GDP will stabilize, but this isn't a huge blowout in debt to GDP like we saw in governments in Spain, in Portugal, in Greece, as sort of banks were taken on balance sheets there. So we're going in the wrong direction. No, we're adding fiscal risk, but this is not some sudden jump to a much worse place. And as a result, basically, Moody's are going to be somewhat cautious about what they do next.
Peter, if you were to advise the South African government, what is the single most important thing that we need to do to get our backs off the wall?
Well, the main thing is credibility, I think, and that's particularly true around the SOE bailouts, around the Eskom bailout in particular. And the real trouble that investors have here is there's been so many plans. There was a Lazard plan, a BCG plan, an Eskom board plan, there was an task team plan. There's now a government policy supposedly on Eskom, but nothing yet has been actually made public. And we really need to see a white paper published. And that's really what Moody's is looking for, a white paper to be published that fully lays this all out, which then investors and rating agencies can use to really think about the credibility and hold government and these SOEs to account. That's the key thing on the SOEs. On the fiscus in general, there's a slightly more challenging point. The interesting fact from yesterday was the panic around Eskom has created some space for some deep and painful and politically challenging cuts to the public sector wage bill, but really there's very little left now on in terms of government cuts that can be done. And the next stage is going to be more politically challenging cuts, actual retrenchments, which might be needed if revenue continues to surprise to the downside. And that will be needed, I think, to show investors that that consolidation is credible.
Well, that was Peter Attard Montalto, Head of Capital Markets Research at Intellidex. Thank you for joining us, Peter.